All right, you guys. Hey, this is Uncle P from Super Easy Forex, and this is the part 2 video of the market makers' manipulative moves that they do. Okay, so on this one, I'm actually going to show you some charts, and I've got a lot to cover, so I'm going to ask you to please watch from start to finish. Okay, from start to finish, because this is going to help you understand exactly how you've been losing trades. And hopefully it'll get you in the right direction to kind of see what I'm talking about. What we're talking about today is impulse moves and pullbacks. Okay, impulse moves and pullbacks. But before we do that, I got a lot to cover. So let me get through a couple of preliminaries and then we'll get started. Like one of them, people say, well, you don't ever talk about your signal results. Okay, well, I'm not going to do that every single week. On YouTube, the paid members who pay for our signal service, they actually get a weekly report, a summary every week. So for this particular time, I will do it. So let me pull up the results so you guys can see that and get that out of the way. Okay, and if you're in the signals family, you'll typically get a report that kind of looks like this. And I apologize, I haven't made it. Let me try to make it bigger so you kind of see it. So I actually pull this report at the end of every trading week, and I send it into the signals group. So if you haven't joined, like I said, that's an easy entry point for you. If you can't afford to buy the Simplicity system where you'll actually be live in class with me, or if you can't afford to get the scanner just yet, which is a phenomenal tool, which is on, if you go to our website, click on other products, it's right there. But Simplicity is the beast, and you have live classes with me. But if you can't, some people lost their job and they're just needing an entry point to make some money. Well, the signal service is a great point. It's really cheap and you get a lot with it. So here we go. So here's the last week's results, and I literally list out every trade we took and the results, whether it closed out early, whether it was a winner or a loss, and then I give you the summary right here. So last week, and this has already been posted into the group in a larger form, but last week we had 10 trades that won, 3 that lost, and 3 that we closed out early in profit. That gave us a total of 13 wins, 3 losses, and we're still holding one over the weekend. And in addition to that, with our signal service, and again, I'm going to get to the charts. I got to get this stuff out of the way, so just wait. And I'll get to the market maker stuff, but again, I got to get the preliminaries out the way. Whenever we post these results for the signals group, just in case you decide to join, it never includes the results also that you made with the scalping sessions. Why? Because that's Miss Jenny's class. She's a 6-figure earner in the business, and she runs live scalping sessions twice a week, which when you join, the class schedules will be on the inside of the tutorial program. Just look in there and you'll know what times and dates that she does it. But those results, because it's in and out so quickly, we don't even count those. So those are always going to be on top of the regular signals you get from the signals team. Okay, so that's that. All right, so for all you who are saying he'll never tell us the signal results, okay, now I just did. Don't expect it every week, because again, pay for it and you'll be in the group and you'll get this weekly report. Okay, all right, that's out the way. Next, okay, so let's get for real. Next, I got to talk about one thing real quick, and that's Minnie's Pantry. Minnie's Pantry is a place we're donating if you want to help us. We're donating to Minnie's Pantry this week, which is up in Texas. They are a food bank. A lady started it, and now people are driving in droves trying to get there because she's donating food to these people who lost their jobs and everything else. So if you want to find a place to donate this week, we're supporting Minnie's Pantry. So if you want to find a place to make a small donation, go to their website and you can do so. But that's what our company is doing this week. All right, enough of all of that preliminaries. Let's get to the stuff. All right, so we're looking at some charts right now, you guys. And as I told you, the market moves in waves, or as I call it, the ocean wave theory. And most traders are getting trapped in the waves. They're getting trapped because, and the market makers know this. I mean, they know it. Okay, so I'm going to take my time and explain this, but I wanted to show you this so you can kind of see the visual of the ocean, and then you're going to see how it's working out where the market makers know what you're doing, because they do these. Just like the earth has a time when the tides move in and they move out. Now they move in and out all day long, but if you come to the beach at a certain time, you'll notice that the shoreline is way out. which means you can walk on that sandy beach at that time with no problem. Okay? But then if you come in a different time and you try to walk in the same exact spot, the ocean is crashing in real hard. So the water has moved in to shore. And during that time, you bet not be trying to walk on the beach because you'll get drowned. You'll drown. But then if you walk at the right time, you can literally walk on that beach under where the ocean was splashing and there's no harm. The problem with a lot of traders, you're trading when the ocean is in tide and you're drowning. Your stop loss is getting hit. All kind of bad things are happening simply because you're trading at the wrong time. And the market makers are doing it. They're controlling the ocean waves. The moon controls the world's ocean waves, but the market makers and the institutions who have the big money to drive the market in certain directions, they'll drive in certain directions, pushing the wave in, and then they'll snatch it out and it just collapse. The problem is, and that's called an impulse move, and I'll show you that momentarily. The problem is you're jumping in when they're pulling out. Please write that down. You're jumping in when they're pulling out. Another way of looking at it, you're jumping off a diving board when the pool cleaners have just pulled the plug to drain the pool. You're busting their head every single time. Why? Because you are getting in at the wrong time. Your analysis is great. Your theories are great. All that stuff. And that's what's frustrating, because you spend hours upon hours marking up charts and all these different things. But the problem is, after you did your analysis, the next most important thing is your entry. When? And so you mark up your chart. You do all this stuff. And then what happens is the impulse moves and pullbacks play off of people's emotions. Did you hear what I said? Write that down. The impulse moves and pullbacks play on people's what? Emotions. And let's look at that. So let me show you the ocean first so you can take a look at this. Again, we're going to take our time. Okay, since I couldn't do it live on the YouTube live, and we're going to take our time. You're going to see this. Then I'm going to show you the same thing, because you're actually seeing it right now on my charts. As we speak, it's happening right here, even in this small little section. And this is gold. And why am I showing you gold? I'm going to tell you why momentarily. But this is what you're doing. So watch this. And this is so pleasant. Aww. It's just so nice. And this is how you end your trades, with pleasantry in your heart, thinking, oh, this is going to be a great trade. And you see how the waves are moving in? See? They're coming in. Impulse move. They're coming in, but this is what happens next. Pulls out. Pulls out. Okay? And that's the pullback. But that's when you jumped in. Now the market is coming in and they slapped you in the face, because now you got your stop loss hit and it came back in. Now you're cutting trades early. Watch this. You're cutting trades early. See how this wave came in further than the last? That would have hit your actual stop loss. I mean, your take profit. See? But because you lost the last one, because you got in the wrong time, now every little trade you jumping in, even if it goes out further, boom, see, that's where your take profit was, and it hit it again. But guess what? Because you keep messing up on the timing, you scared now. So you just taking any quick thing. So you're cutting your trades early, your stop loss is getting hit. In other words, it's just an all-around bad thing for you. It's a bad experience. It's a bad experience. Because they're playing on your emotions. So either way it goes, you rarely see those little green. When you look at your results, you rarely see that green, because you're getting tapped out too soon. Here it is on gold. Why do I pick gold? A lot of people like to trade gold. Okay, I can do the Euro USD. A lot of people like to play the Euro USD. These are common pairs people like to play. And I have it on the 5-minute time frame. Okay, and this is actually last week. See, this wasn't far, because this is the 5-minute time frame. Oh, this is a perfect wave right here. Oh, this is a good one right here, and then right here, right here. So let me show you write this down, impulse move. An impulse move, and here's how I'll explain it a little bit. Again, you got to join Super Easy if you want me to go all the way deep and just spend quality time with you going through this stuff. I'm just giving you touch points, okay? So you can kind of get an understanding of what's going on. So you know you have some people in your life, they're very quote-unquote impulsive. Impulsive. What they do is they jump into something, get into a fight, they get into a good argument, and then later on, and it could be you, and then later on, when their emotions are calm, they sit back and relax and they say, you know what? I shouldn't have done that. And you're right. See, you're impulsive. You jump too quick before actually thinking it through. You jumping because you're highly emotional. And most traders are highly emotional creatures now. Because the Bible says where your treasure is, there will your heart be also. You can't detach your money from how you feel. That's why people will go off if you play with their money. Well, when you jumped into the Forex market, they're playing with your money, and that's why you're emotional. And they're playing this impulse move and pull back on you all day long. So let's just take a look at this. You do your analysis, and let's say you're a market maker's method or whatever you're using. You say, okay, I see the railroad tracks. I see the engulfing candle right here. Everything tells me that this is going to be a downward move, right? Right. So what you say is, okay, I'm just waiting for a good entry. I'm waiting for the move to happen. And then what happens is they do this hard rush. Pow, pow, pow. Look at this big candle coming in. And this is the killer candle. Watch this one. This was let me expand it so you can see it better. And hopefully I can go back to it. Okay, there we go. You can see it. Here's the impulse move. See the engulfing candle? And let me switch this so you can have colors on it, okay? Because usually sometimes when I'm trading, I don't care about seeing colors because I trade patterns a lot of times for me. But so for you to see it, all right, so the blues are up, the magentas are down. Okay, we're good. So as you can see, here's the big signal candle saying it was going to be reversing. And so you see this engulfing candle, it engulfs the bull candle. It's bigger than the smaller candle, prior candle. It engulfs it inside. So you got an idea, man, this thing is going down. It's going down. And you're right, it's going down. So here's what you're waiting on. Okay, so now you see, but the next candle, guess what? Guess what? It goes, you jump in right here, but then this one goes up the other way. And you got a small tight butt stop loss. So either your stop loss got hit or you jump out. Dang, 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 dang. Because you thought the moment this is an engulfing candle, so you're like, oh, okay, I'm finna get into this thing. And immediately when you get in, notice what happens. It pulls back. Why? Because the engulfing candle was an impulse move. Write this stuff down. It's literally right here in your face. This is gold from last week. And I've seen tons of these moves. And we're going to show you more examples. But this is the first one because this, for those who like trading candle patterns, this is what happens to you. So we already covered the market maker's method, people, where you see the M. Okay. So you see that. But then we need to talk about the candlestick pattern, people. And I'm going to come back to the market maker's method, people. I got you. Okay. I'm going to help you out. I'm going to help you out. You don't have to like a brother, but I'm going to help you. Okay. I'm going to help you. All right. So here we go. Let's look. So now, where's my engulfing candle one? Hold on. I got to go back to it. I got to find it. Let me shrink. See, this is why I keep my chart small. Where are you? Hold on, y'all. Well, we can even use, no, that's not the one. This one, here it is. Okay, so right here. So we got the engulfing candle, which is a signal of a reversal typically, okay? Meaning that at first the buyers were in charge and now the sellers, the bears, are coming in with authority. So they come in and they rush and they take over, okay? But as soon as you get in, this is where you get in. Right when the initial impulsive move happens. And what did I tell you about impulsive people? Once they calm down, they pull back from their action. They pull back from their action. Why? Because now they're thinking things through. Maybe I shouldn't have done that. Remember that thought? Here it is. Maybe we gonna let y'all bears have this party. But then the bulls come back in and say, nah, I think I'm gonna fight back. And so you have this little pullback in the market. And this is where you get frustrated and hang tight until I am done so you can see the whole thing. Don't just click out now because there's more to this. So what happens is now your little stop loss is so small, 5, 6, 7 pips, 10 pips, whatever, and you're not wise on scalping. That's why we have the scalping sessions with Jenny. Why? Because she's an expert scalper. right? Most traders who come into this market, that's the first thing they flock to is scalping, quick money. But you're not an expert. You don't know what's going on. And so you're jumping in when they're, look at this. Guess who's doing this pullback? This impulse move happens because these institutions, first of all, they faked out all the people who said it's going to keep on going. It's going to keep on going. So they encourage you to keep on buying. And then guess what? Boom, they snatched that market from them. Took their stop loss, took all that money from the buyers. And now they're encouraging the sellers. And within the next candle, boom, they take a little bit of investment money, more than what you and I have, push the market up a little bit and take you out because they know most scalpers use what? Small stop losses. Write that down. Again, you don't ever have to like me. You don't have to talk to me. That's fine. But I'm going to bless you to help you understand what's going on. Because they are doing these little moves and it's so simple, right? Very simple. Little investment money on their end, a lot of money out of your pocket. When you add up how many retail traders all over the globe is falling prey to this. That's why 90% of traders in Forex fail. Because it's easy to understand. These moves, I'm teaching it to you. But if you don't know, and you're a part of the 90%, you're a daily fool. And I'm not trying to offend you. I'm telling truth. The Bible says the truth will set you free. So here's what happens next. Next, after they hit your tight butt stop loss, because you got in right here thinking it was going to continue. No, it wasn't. It wasn't. It got to take a breather. And they pulled the market back, hit your stop loss. And this is where I said, called it the slap in your face. And let me get my crosshair so I can remember this area. This is 9/10. So that was actually Friday. Okay, Friday. That was just Friday. So here we go. They come back, take out your stop loss, only for them to continue right where your analysis said it was going to go. It's right here. This is gold on a 5-minute time frame. You can look for yourself. Look for yourself. Friday, this is 9/10. See, that's why I got my crosshair tool, so you can check it for yourself. I'm giving you all the details. Pull up your own charts and look at gold on the 5 minutes on 9/10, which was what? Friday, Thursday or Friday? Okay. Thursday or Friday, one of them two. Okay. Matter of fact, let me hit Control Y. Let me do that. And that'll bring up your day separator. So that was Thursday. See this day separators? That separates the days. So if you do that, the day separators, you can actually, it'll kind of compartmentalize it. You can see exactly what happened on the activity for that day. Okay. Look at this move, sucker move. See, I told y'all, look, here it go again. Impulse move. They push, and yank it from you. So you thought it was going to keep on going, and they took it. And then they did mini moves. Now you say, okay, I'm going to sell again. And they, boom, took it from you. Took it from you. Took it from you. See, all day long, it's doing the ocean wave theory. Your problem is you keep getting in at these bottoms because you're jumping in on the impulse move. You're impulsive when you trade. I don't want to miss the move. I don't want to miss the move. And as soon as you get in, they take it off. They take it off every time. Every time. Every time. And then they continue to do it over and over. See, you can now see it now. See, with this being shrunk, you can see this is, I think, Wednesday's activity. Wednesday or Thursday? Yeah, Thursday. Wednesday and going into Thursday. This is the end of Wednesday. See, you see this up and down, many ones and big ones, many ones and big ones, many ones and big ones. And now they're encouraging the buyers. Buyers, come on in. You see the thing? It's going. And here they go. How high can you go? How high can you go? And now, and there we go. Boom. They take it away. And now they snatch it. But then they bring it back. See, now you're getting sick. You get what I'm saying? You get sick to your stomach because you get frustrated when you're jumping in. And see, most people don't even shrink their candles this small to get a bigger perspective of what's really going on. Here's what you do. You got your candle so big, all you do is zeroing in on what's in front of you. You don't know nothing what's going on. What's going on? See, and that's my point. That's why you're getting taken advantage of. Okay? So let me go back and we're going to do a little bit more. All right, so I'm going to shrink it a bit. And I'm going to teach you a little something today. All right. So now here's the deal. It was correct, but you keep getting in because you're waiting for the move to happen. You're not doing your analysis saying, okay, I'm going to anticipate that they're going to pull it back. They may pull it back when I jump in. Okay. They may pull it back. So therefore, let me not use such a tight stop loss. Let me give it a little breather room. So in case they come back and y'all know this stuff. That's what make it bad, because you can talk this language, but when it's time for execution, you don't do it. So you know that they may do this quote unquote in post move and then do the pullback. You even see it here, which creates this one is a slightly off M, but nevertheless for market makers methods. Okay. But the point is this, you know this stuff. You quote it, you talk about it. This is called a what? Retest. They may retest the top. They may retest certain areas. So if that's the case, why do you have your stop loss so small? You become a target, right? So now they come back, retest. And then your stop loss got hit and they dropped. And look what happened. The market actually went in the direction you knew. You knew it with the impulse candle right here. What do they call this? Engulfing candle. It's an impulse candle. You knew. But then you still lost the trade. Why? Because you jumped in right here, because you waiting to, oh my goodness, oh it's going down, and you jump in. The moment you're telling yourself, it's going down, see, you're not relaxed, and you're finna get trapped. And therefore, you put your stop loss right here. Why? Because you're more worried about, I gotta have a 5 or 10 pip stop loss versus if I lower my lot size, write this down, this is so important. If I lower my lot size and stop trying to be a person who's making $1 million in a week, and I actually become a professional trader, I know that if they do come back and retest, the highest point is going to be where? Above here. Above here. So if I lower down my lot size to accommodate for a more comfortable stop loss to avoid being hit, just in case they come back up here, because sometimes they will, then what happens is I won't be prey to the stop loss. Now, you say, well, you ain't going to make as much money. That's where your greed comes in. And until you learn how to control your greed, you're going to always fall prey to the impulse moves and the pullbacks. So if it was me seeing this engulfing candle, okay, I already know this engulfing candle probably is going to be the highest peak. Therefore, my target stop loss is going to be a few pips above this. Automatically, I know where my stop loss is going to be. Because if they do bring this all the way back after the initial impulse move, push, just like a woman giving birth. They tell her what? Push. And when she runs out of strength, what happens? It comes back and she has to take a breather, or that's where the retest is, right? So I'm going to have automatically my stop loss here. There's more. Don't go nowhere. I told you I'm going through this as best as I can without giving you everything, because there's timing when this actually happens. That you're going to have to observe on your own, but I'm going to give you a clue, okay? Because there's certain sessions where they actually do this stuff on a bigger scale and they play with you, all right? So the point is when it comes back and pulls back for this breather, you know that, hey, I need to loosen up my lot size. Maybe you used to trading with a standard lot. But maybe you need to trade with a half a lot to give yourself a little bit of better room on the stop loss so that if they come back and retest, they don't, what I call slap in the face trade. Why? Because your stop loss was right here, okay? And I'll put a little mark on there. So you jumping in right here on this next impulse candle, right here is where you getting in. Right here is where your stop loss is, because you ain't even worried about the actual market structure. You worried about how many pips your stop loss is. I always use a 5 or 10 pip stop loss. Okay, that's why they keep slapping you in your head. Okay, so let's change this one to blue. Okay, that's your stop, because you're inventorily trading, right? And so what happens is they come back, break through, hit your stop loss, and let me measure that to see if that's actually 10 pips or how many pips that is. Well, that's 30 pips on gold, which is quite a bit, but that's still cool. So anyway, instead of you saying, okay, let me lower my lot size and I'm going to do this and I'm going to be patient, and I know that on the initial impulse move, it tends to do what? Come back. Me, I like to wait for the pullback because I am jumping in as soon as they pushing hard because I already know what's going to be the next thing. Huh? What comes after the initial push? The breather, the pullback move. So why are you jumping in on this when you know this move is coming next? Why didn't you wait? So now you could have entered here. Your stop loss would have been up here. And when it came back, you almost got in at the best time. And then look at this thing. It just went right on downhill from there. But in the pathway, look at what it did. Impulse move, took out stop losses. Impulse move, took out stop. Look at that candle. Look at that stop hunt candle. They constantly doing it on the way as it's doing the ocean wave theory. Okay. Here's your biggest problem. You're trading off this 5-minute time frame and you got all your this and that, and now you understand you jumping in on these big candles, these impulse moves, not realizing it's going to pull back. It did it here, and let me make that bigger. Matter of fact, let me draw a line, a vertical, so we'll have it. All right, there we go. So I'm going to broaden these candles. Now you're kind of getting it, okay? Now you're kind of getting it. So here, you jumped in on this candle, and the first thing they did next was what? Pulled back and hit your stop. Let's measure that candle to see if it was around 10 pips or so. So you got in right here because you jumping in on the impulse. They pull it back, and surely enough, that's 20 pips. Took you out and then dropped it the next candle. Do you see what I'm saying? So the way to avoid that is either one, be patient and wait for after the impulse move, wait for the pullback. Wait and see. And if so, you getting in at a better price. Will you always know the exact point? No, not even me. I don't know the exact point. But what I do is I wait for that because I know it's coming. And therefore, my stop loss is now automatically reduced. Why? Because I'm getting in at a better price. When I used to do real estate, let me teach you guys like this. When I used to do real estate, which I'm about to get back into, I used to own a lot of real estate in different parts of the country. Okay. One of the things that I had learned in real estate, I learned to buy at a time when nobody else wanted to. Because I knew if I got in at the right price, when it was time to sell the property, I come out with a higher profit margin than everybody else. I'll never forget gave a real estate seminar back in the day. This was years and years and years ago. I gave a real estate seminar and I told people that I'm going to build and buy property in this area. And it was standing room only. I mean, it was a packed house. And I told people I'm going to buy this property. Hear me good, because it's the same idea in the markets, in Forex. It's the same philosophy in business. It's the same. It doesn't change. So watch, I'm giving this to you as many ways to get you to get your vision straight. So what happened is that I was telling people, hey, I'm going to buy property in this area. And I know, based on my analysis, that if you hang on to this property, you're going to come out very profitable in about 2 or 3 years. Why? Because you're getting in when everybody else is not. Okay? Your timing. See, watch this. Timing. Market timing. A lot of people followed my advice along with me. All of us who bought property in that area, even when everybody else is saying we were a fool, they bought that property, and watch the impulse move, when the department stores and the schools and everything was starting to flow in and get built and everything, guess what everybody else wanted to do? Oh, they rushed into that area trying to buy up every single piece of property they can get in. Meanwhile, us, who were smart, who knew market timing, when did we buy? We bought when nobody was paying attention. We bought when everybody else wasn't. We got in at a better price. So when they were buying, what were we doing? Selling it to them. See, we were selling to the fools, the ones who wanted to always keep jumping in because they got to wait for everybody else to do it before they make their move. That's the exact same thing what happens in this market. Everybody jumps in on these big candles. They jump in on these big moves, not realizing it's going to come back on you first. So for me, I wait for them to pull it back because it reduces my lot size. It reduces my risk. And therefore, I'm catching them when they're trying to play over people. So while they're playing over everybody else, I'm catching them. You see, what's required? Patience. And it requires one more thing. And here's the big one. Watch this. Remember I told you that this is the gold chart on the 5-minute time frame, right? Okay. And I just showed you how to use your day separators. Hit Control Y on your computer, and that's that. And you can see what's happening from the prior days, and you can kind of get a better understanding. Next thing I do, I don't have my candles real big. Okay? I don't have my candles real big. I have them small so I can kind of see what's going on overall. But there's one more thing I'm doing, and I'm going to see if you guys can figure out why I'm doing this. I don't want to see it on the 5-minute. First, I'm going to go to my 4-hour chart. Why do I do that? And I'm going to take Control Y off. You can add it back on, and you can clearly see now the rhythm of what's going on per day. Why am I doing that? Why am I doing that? See, now you can see the real impulse moves over 4-hour candles better than you could have when they was taking advantage of you on the 5-minute. Because the 4-hour candles continue. They're 4 hours. So within that 4 hours, the 5-minute time frame is real jumpy. Do you see why you're constantly losing? Do you see why you're constantly? Let me give you an example. Let's do this. I told you I'm not going to rush through this video. I'm going to help you. I'm going to mark up this one here. Okay, and what day was that? That's I want you guys to see this. 8:11. Okay, so we're going to go down to the 5-minute time frame, and let's find 8:11, and let's see if we can find our little thing here. Okay, so let's go to 8:11, and watch how the motion happens on the 5-minute time frame, but it's much smoother on the higher time frame. Now, this is not to say that you're not to trade on the 5. I'm just showing you how I start out higher and then come in lower. Okay. Give me a second. Here it comes. See all this action that's going on the 5-minute time frame? This is all the same action. Let me move my head out the way. This is all the same action, but now you can clearly see the rhythm of it on the 5-minute time frame. But because you're trading this, and I hate that part, because anytime you try to blow up the candles, so let me blow them up bigger, because this is what some of y'all do. Now can you see where your problem is? Your vision. You're not seeing everything. You're not getting it. If you were looking from a higher time frame first, you would have already known what direction. And I'm almost there. 8:11. Come on. Come on. So for me, I start out further first. Almost there, I think. Hopefully. Jeez. Come on. Let me do this. Sorry, you guys. Let me see. Oh, that's why. Auto scroll was still on. Duh. Sorry, you guys. Okay, here we go. And this is a free lesson, so you can have some patience. Somebody's trying to help you. All right, so let me go to that, and you guys will see what I'm seeing. Why I would have had a more looser stop loss, because I knew what was really going on. Lord, this is taking forever, huh? Okay, let me do it like this. Let me go to 15. Maybe I go faster. Yeah, it's going faster now. Okay, there we are. So we'll just do it from the 15. Okay. Because going to the 5 minutes, too many candles to go backwards. All right, so anyway, here's the area. And now let me just double click and get this out of the way. All right, so here's the area. But as you can see, some of you guys, you're jumping in right here. You're getting in, and it goes back against you. Okay? But if you would have known from the higher time frame, and again, I wish I could do it from the 5 minute, because the 5 minutes show you much better where you're getting trapped. But because it's taking so long, I got to keep this moving. All right. But the point is that even from the 15-minute, look, even if you move to the 15-minute time frame, you can see the waterfall. You can see the shape of how everything was flowing. Okay. So therefore, for me, if it was me trading this, I'm going to be looking from the 4 hour or the 1 hour, whatever you want to do, from the higher time frame first before. And I'm going to shrink my candles. Why? Because I need to see what's going on overall. So if I'm looking at this thing overall, and let me shrink my candles more, now I can clearly see this was clearly an uptrend. So when they did to see these impulse moves, they do it even on the 4-hour. See, they pull it back against you. They call them flag patterns, okay? But even on the smaller time frames, you're getting trapped in these flag patterns. And that's what they call them, flag patterns, okay? Bear flags and bull flag patterns, okay? So now you're getting trapped right here. And look at how they do it. They come in with these hard candles, these big bullish candles, or either bullish candles or bearish candles to really encourage you to go the wrong direction. Why? Because you don't really see what's going on anyway. Most traders who come into the Forex market do not know what's really going on. Do you hear what I'm saying? They don't know because they're always being taught, come in on that 5-minute and scalp, 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 right? But if you knew, and let's just say this is a clear uptrend, you can see it from the 4-hour. Right? But because they're coming in with these big candles like this one here, look at this one here, sell, 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 and you're just going in hard. What happens next? They trapped you. Impulse moves, and then the pullback. Impulse move, pullback. Impulse move, pullback. Impulse move, pullback. Had you looked from the higher time frame, that alone would help you when you're trading on the 5-minute. Because now you know if they're coming in with these impulse candles that's going into a sell direction when clearly the higher time frame is saying it's a what? A buy. A buy. Then you know, let me not do that. Now, am I saying that you can't make some pips if you're trading on other time frames? Yeah, I do it all the time. I do it all the time. But I do know that some of these trades, if I'm pulling that kind of move, I ain't hanging on to it. I'm getting in and I'm getting out. Why? Because I know from the aerial perspective exactly what's going on. So here's my recommendation. This was kind of a long video and you can clearly see it here. See? Impulse. Big candle. Big candle. That's the key. Big candles. And then they pull it back on you. Big impulse move. What happened next? Pulled it back on you. You keep getting in at the end of the story, right when it's about to go back the other way. And now you become a buyer, and then they took it away from you again. And this is constantly happening to you, and you're getting seasick because your timing is off. Now, here's the other point to it. There are market sessions, because you got the Tokyo session, the Asian session. They call it the Asian session. You got Tokyo and Sydney in there. You have the Frankfurt section, which is the Great British Pound, which opens 1 hour before London. London is one of the notorious ones. And if you don't know the timing when you should be looking for trades in London, they're going to eat you alive. Remember I told you a lot of people, they go to bed saying, oh, I'm in a winning trade, and they wake up in a loss. There's a setup during that session between the Tokyo and the London. And if you don't know the perfect times to really start looking, you're going to constantly keep losing. Because these are not just happening all the time. They happen at certain sessions. Because they know that's when the buyers and sellers are really going to be doing their thing. And they're trapping you. And that's why I learned to just sit back and wait. Are you hearing what I'm saying? If you want the specific times, you're going to have to join the family. But either way it goes, hopefully this helps you. So let's do a roundabout. And here's what my advice is. This week is going to be a perfect week for the advice I'm about to give you. I strongly suggest that you do like I did. What I actually had to do was just stop trading so much. And I had to sit back and actually watch, just like you would your kids, watch their behavioral patterns. And when you see the behavioral patterns, you begin to understand, oh, I finally get what Brother P is saying. I get it, right? This week is going to be one of those good weeks to do it. Here's the reason why. Let's go to the news for this week and you'll see. This might be one of those weeks where you say, you know what, I think I'll just sit on my hands and relax and I'll just study the ocean wave theory just to see if he's actually right. Okay, watch this. On this week, I'm strongly suggesting, now do what you want, it's your account. I'm strongly suggesting stay away from trading the Great British Pound, the GBP. Why? Because the reason why it has such a hard drop on last week is because they are in the middle of another Brexit vote, and the vote or negotiations this week on, and I'm using my FX book app, on this week, on Monday, which is in a few hours, 21 hours from now, 21 hours and 5 minutes, they're going to be making that vote on the GBP. I would trade the GBP, if you choose to, anytime after that, not before. Okay. Next, You also have, hold on one second, there was some more. Let me go to it. On the US, they have retail sales numbers, which is coming out, but that's not the biggie. On Wednesday, the Feds are going to be making an interest rate decision. Here's what I'm suggesting. Typically, when the market is waiting for Fed Chairman Powell to speak, they will barely move a lot. So I'm expecting, and again, it could be, anything can happen, but typically, when the U.S. is waiting to make announcements on the interest rate news because of the power of their decision, most other countries follow the lead of the U.S. Therefore, the market tends to just sit sideways. It doesn't move a whole lot, right? That's another reason why I'm telling you this week will be a great week for you to simply sit back and observe on the lower time frames the ocean wave theory. Okay? Just sit on your hands. You don't have to trade all the time. Just watch and start watching what sessions these moves are happening. Okay? Now, if you join the Super Easy Forex family, I'll tag you and I'll give it to you. Okay? Because there's certain times I don't care what I see in the market, because I know that's actually the setup. They're going to show you some great trade setups. I know that because that's the impulse move. They're trying to get you to be impulsive, and then they're going to snatch it away from you. They do it every day. Okay? Next, you have also on Wednesday, the JPY is announcing interest rates. Okay? So it's very important. See, this is one of those weeks, you know, maybe you can sit on your hands. Then you got a whole lot of news on Thursday for the GDP. Okay, they got the vote. They got a lot going on. A whole lot of red envelopes on Thursday. So this week, like I said, GDP, it ain't high on my list for trading. Okay. Then you have the initial jobless claims on the USD, which isn't that important, and that's not that big of a deal. And that's pretty much it. Okay. So anyway. That's that. So I hope this video, I know it was pretty lengthy, but I'm trying to simply show you these impulses. Here we go again. Look at this. See, right here. Big candles. And that's the key. That's the key. Big candles. And because they know when most people trade impulsively, and they come out with these big candles, and you're like, oh, I got to hurry up and get in. It's on the up. It's going up. It's going up. And what happened next? They pulled it back and took out your stop loss. And then after they took out enough people's stop losses, then, such as everybody knew, this is going up. It is. But look what happened. They pulled it back on you, took you out first, and then they took off. And that's why I call it the slap in the face trade. Because they not only took your stop loss out and played you, but then it went back in the direction you knew it was going to go. And now your feelings hurt. Now your feelings hurt. And what they have done to you is this. Now, the next time you trying to do another impulse, because this one actually worked out. See, they got you so dizzy from the last punch until you don't know what to do. So you confused. So, well, what do? Do I use a bigger stop loss? So now you just all over the place with your trading. Why? Because you didn't know this was coming. You knew. You seen it. But that big candle, boom! And then they snatched it back. And then they took off with your money. Here it is again. Big candle. Boom! Snatch off with your money and then drop. Slap in the face. They got you again. And they do it over. Look at here. Impulse. Stop losses. Impulse. Stop losses. Here we go again. Impulse. And this is a news event. A lot of you traders stop trading news events. You ain't good at it. Here's the reason why. Look at what they did. It didn't matter whether you was a bull or a bear. It didn't matter whether you were buying or selling. Your stop loss was going to get hit either way on big news events. Stop, stop, stop. Stop it. So look what happened. You said, okay, well, I'm going to get in on this one. It didn't matter whether you was buyer or seller. They, boom, boom, took out both people. Why? Because they're getting people, because everybody's trying to trade impulsively. Nobody's patient, relaxed, calm, and being a professional about this in this business. And look what happened. Impulse move took off with you. And they hit both sides on the market. This is some terrible stuff, you guys. Okay? So, very long video. Please let me know. Shoot me an email. Let me know if you liked it or not. And again, I apologize that it's long. But again, I'm teaching you an actual lesson. Okay? So that you can see this. The ocean wave theory. Okay?